Ladies and gentlemen, good day and welcome to the Intense Technologies Limited Q3 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Siddharth Rangnekar from CDR India. Thank you, and over to you, sir.
Thank you, Rayo. Good afternoon, and thank you for joining us on Intense Technologies' third quarter FY24 earnings conference call. Today we have with us Mr. C.K. Shastri, Managing Director, Mr. Jayant Dwarkanath, Director, Ms. Anisha Shastri, Director, and Mr. Nitin Chadha, CFO of the company. We are also joined by Mr. Lokesh from the management team. Before we commence, please note that some of the statements made on today's call could be forward-looking in nature, and a note to that effect has been included in the earnings release of the company, which is also available on the stock exchange and the company websites. I would now like to invite Mr. Shastri to give us a brief introduction, followed by Ms. Shastri, and then we'll open the call for Q&As. May I hand it over to Mr. Shastri now? Over to you, sir.
Thank you. Good afternoon, everyone. Welcome to our Q3 FY24 earnings call. As always, look forward to this earnings call to hear your critical inputs. Just to make a beginning, I have with me our CFO, Nitin Chadha, Anisha, who's handling our operations, Jayant Dwarkanath, looking after our international alliance relationships, and Lokesh, who's helping in the finance department, and Pratyusha, company secretary with us. We are pleased to inform you all that on a consolidated basis, we have grown 46% year-on-year in terms of revenues. In terms of PAT, 37%. We had a revenue of 27.7 crores compared to 21.15 crores last year, which is a growth of 31%. And on a consolidated basis, for 9 months, it is 84 crores and 57.97 crores. Again, a growth of 46%. In EBITDA also, we've seen a decent growth, 6.29 crores vis-a-vis 4.65 crores, that is a 35% growth. Same goes with the consolidated basis, 17.96 and 13.14. The net profit has also grown by 25% and 37% on a consolidated basis. The strategy and the planning which we did in the last quarter of last year, and we are just implementing those, and we are quite encouraged with the results and improvements what we are seeing. We are definitely seeing green shoots in all the areas which we have made investments in, and we continue to invest in sales and marketing and growth areas. I will ask Anisha to take you through the details of the project Butterfly and how the implementation and the details of the operations are before we take your question answers. Anisha, over to you.
Thank you, CK, and thank you everybody for joining us on this call today. For those of you who have been following us, I'm sure you know what Project Butterfly is, but for those of you who haven't, I'll just give you a quick overview. The intention of going on this journey of Project Butterfly was to ensure we add additional revenue streams so that we're able to cross-sell better to our existing logos. Many of you who have been following us already know that we sell solutions and products to some of the largest logos in the country in the BFSI sector and in the telecom sector. And so the intention of adding Project Butterfly was to see how can we add additional revenue streams to be able to increase our wallet share from each of these customers. Apart from that, intention was also to see how we can optimize our processes internally to ensure that we are able to see better margins overall. To that effect, over the last 1 year, we have added new revenue streams in terms of managed services, both to the private sector as well as to government and public sector organizations. We've added data services. Data has always been in our blood, in our DNA. In fact, all the work that we did in the past, we had a lot of data services integration, quality, standardization, all of these services we used to do, but we used to sell them as part of our product offering. Now that we have repositioned ourselves as a tech-enabled services company, we have realized the value of being able to sell each of these as separate services as opposed to just bundling them into the single price that we used to get for, our flagship product. So we have data services with cloud services where we do managed services in terms of migration of cloud from one cloud to another, from on-prem to cloud, or just also advisory around what cloud options are better for organizations, etc. And then we tied all ends with respect to our communication governance services. So for those of you who know us, you know that we're very, very strong in this enterprise communication space. What we did over the last 1 year was tie up the entire offering so that it is one end-to-end offering. So today we do the communication design, we do the communication dissemination at scale. And by scale, I'm talking sending, say 500, 600 million communications every single day, generating 60, 70 million statements every single day, right? So operating at that scale. And then we also closed it with the transmission services. First, while we were just handing over all of these communications to a transmission partner, now our platform is also able to give the customer a holistic view of what communications are going across which of their communication gateways, and we're also doing the transmission with it, right? So this way we are tying the end-to-end communication, enterprise communication gimmick. In fact, what we also do now is advisory services. Having been in this industry for the last 30 years, now we are also able to advise our customers as to how they can optimize on their communication spend. A result of this is a number of our customers are saving millions of dollars annually in their communication spend. And this is happening because we are able to give them a holistic view, and we are also able to advise them on, how within the regulatory guidelines to optimize their communication spend. Another thing that we added was in the data quality and the data governance space. Like I told you, in the past, we were always strong with data integration. We integrate with all, major core banking, CRM, ERP, all of these products we anyway used to integrate with. So now we've extended that capability of ours, and using our IP assets, we are able to provide strong data services to our customers. In fact, in this quarter, we also closed a large data services deal around data quality assurance and data governance, with one of our existing customers. So we help our customers basically leverage their data so that they're able to, leverage it actually to its true potential. They're able to cross-sell and upsell to their existing customers as well, based on the kind of data that they're able to mine. You all know how important today data is, and no organization makes any decisions without, the help of data. But, your analysis is only as strong as the data that you're feeding into it. And unfortunately, given that our customers are such large-sized organizations with hundreds of products in the background, their data is always in silos. So, we help them bring it all together, create a golden record. We help them standardize the quality of their data so that, they are able to cross-sell and upsell to their existing customers better. So that's one revenue stream that we added. We also started focusing on the public sector over the last 1 year. And in fact, last quarter, you saw that, we added a few public sector logos also to our kitty. And this now also, the government pipeline as such is looking pretty strong. We've added 2 logos in the BFSI sector in this last quarter. Again, very well-known names in the country. And our hope is to see that, we start small and then grow business with them also subsequently. you already know that once we entered an organization, we're a very, very committed partner. We're a very committed vendor, and we've always ensured that we keep our customers happy and satisfied so that they stay with us for longer durations, and and we're able to see more business opportunities with them, and that's what is happening at the moment as well. So this quarter we added 2 new logos. One was in Sri Lanka and one was in India. We also added 2 new partners in this quarter, product company partners whose products we're able to cross-sell to our existing customers, and which are good, healthy extensions to the business that we're already in, like in the data analytics space, in the data spaces, basically. So we're in advanced stages of, commercial conversations with existing customers, a couple of opportunities using these products as well. So adding partners is again a key part of our Project Butterfly strategy, so that we are able to cross-sell more and better to our existing customers. This quarter, we also proud to tell you that we've hosted our flagship product on the AWS Marketplace as a SaaS offering. So intention is to work with the AWS sales force and their connect to see how we are able to hunt new opportunities together. We've also added a few small SaaS offerings on the Chrome extension store. So for those of you tracking the IT industry at large, you know that today it is the world of generative AI, and it is the world of generative AI-based extensions on your course like Chrome, etc., which make it more seamless and easy for customers to use. We have done this on the Chrome store in this quarter, and we're slowly seeing healthy traction. Intention is to create small, monetization, from these. Basically, these are IP assets that were part of larger IP assets in our organization, and we have basically broken them down and put them on the Chrome store so that we're able to also offer smaller offerings, but will create these recurring transaction-based revenue streams for us in the future. So with that intention, we also set foot in that direction. This is on the revenue side. On the bottom line side, we have been taking sincere measures to reduce our operational expenses. We are investing in tools and processes internally to ensure that we are able to track our budget by project, our receivables, etc. better. By means of that, you can see that our receivables is starting to show in our receivable numbers as well. So this is overall what we have been doing so far. Intention of Project Butterfly is to ensure that we add top line and equally focus on our bottom line as well. And I'm happy to tell you that our strategy has been paying off. You are seeing it in terms of our quarter on every quarter's performance as well. It has definitely shown, the fruits in the right direction. And I request you to please look at us from a year-on-year basis. Don't look at us from a quarter-on-quarter basis. While we are adding revenue streams, which hopefully will not be as long sales cycles as our products used to be erstwhile, even then, enterprise business as such is long sales cycles. And so request you to please look at us from a year-on-year basis. And we're putting in all our energies and efforts to ensure that we see the right value that this organization deserves. That's about it, and I think with this we can move on to questions, Siddharth. Thank you so much, everybody.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Sumit Kothari, who's an individual investor. Please go ahead.
Yeah, firstly, congratulations for a great set of numbers. And Anisha, you spoke about two logos which was added in this current quarter, one in the BFSI space in Sri Lanka and one in India. Can you please quantify this in terms of numbers? What kind of revenue we can expect in FY25 from this orders?
Sure. Thank you so much.
Sorry?
Go ahead, Anisha.
Sure. Yeah. Thank you. Thank you so much, Mr. Sumit. So typically what we do is we enter logos with a first number, and then we find ways to be able to provide more value to them, and then in turn we grow our wallet share. So when we start, typically these engagements are more to the tune of say 300K, 200K, that kind of initial price, and then dollars, and then post that we grow within those organizations.
So typically, how much time does it take, like from the initial phase to the growth phase? How much time does it take?
So say the first 6 months you spend in implementing, the existing requirement, and then once you build the relationship, then you are able to cross-sell, upsell better. And also there are regulatory requirements, so CRs keep coming in, etc. So after that, we start seeing a healthy addition.
Yeah.
Typically,
nothing substantial in the current financial year or the next financial year. Is that the right assessment?
Sorry, can you repeat that, please?
So I'm saying, since we already done like the 9 months of the year, can we not expect anything substantial from these two orders in the current financial year?
From the current financial year, it will be only license values and initial implementation.
Sure, got it. And we also spoke about expanding our collaborations with existing clients, which would give us guaranteed streams of revenue. Can you please quantify this also in terms of revenues? Because this is something which we are expanding our collaboration. So I'm sure we have an existing relationship with them, and it's like providing some value-added services. Can you please quantify it in terms of numbers for this?
Existing numbers, if you really look at it from revenues from our existing clients, 75 to 80% of our revenue comes from our existing clients, Sumit. And we intend to grow that as we go along. For example, the first data services deal we got was from my existing customers. A lot of transformation services which we are looking into are from, we are starting to see some great encouragement from our existing customers. Because in enterprise business, it's always known that acquiring a new customer is a long selling cycle. Cross-selling, upselling to an existing customer is the easiest thing, provided you are doing a great job with what you have already engaged with. So we are very good in keeping our customers happy. We run every quarter feedback programs and everything, and run a center of excellence in our delivery.
Okay. Sure. One more thing which I noticed in the operating expenditure is the software cost. So the software cost in the current quarter was negligible, just 5 lakhs, I think, when compared to 5 crores and 2 crores quarter on quarter and year on year. So can you please elaborate, like if we have to make any modeling in our numbers, what kind of a software cost we should be having in our model? Because this is a very fluctuating number. So have you made some investment initially and the software cost will be much lower going forward? Or how is it? Can you please throw some light on this?
Yeah, hi Sumit, Nitin here. When you talk about the software cost, I am presuming that you are talking about IT infrastructure cost, which is about 5 lakh in the current quarter, and which was about 5.6 for the last quarter, right? So this is not software cost. Actually, like we said, we had a government contract in last quarter, which also involved, besides supply of software and services, included supply of some hardware. So this is where we had put up a distinction, and like you mentioned, this is highly volatile. Depends on deal to deal, wherein we had closed one deal for the last quarter, we had this expense. In the current quarter, we are in process of implementing and we'll be billing them in the next quarter probably. So, which is why you don't see any cost. This is not a software cost. This is more of those servers and other equipment that will have to also supply to being a preferred partner for one-stop shop sort of services.
So you need to say that this cost would vary depending on the orders we get in, and there's usually no way of estimating this, correct?
That cost will directly have an impact on the revenue. If you have a 5 crore there, you will have a 5.3 crores on the top line also growing.
Perfect. Within my next question is regarding the receivables. So what is the current receivables now if you compare it with Q2, and what is the cash on books currently?
Yeah. So from a receivable standpoint, Sumit, we have improved considerably there. The current position as of December, our receivables on a consolidated basis stand at around 49 crores. And we have also, because of the focus, management attention and persistent follow-up in systems and processes that we have put in place, we have also been able to reduce our DSO from 197 days, which was for the financial year ended March 2023, we have brought it down to 160 days for the quarter ended December 2023. And we expect this to further optimize and bring it down to a manageable level.
Sumit, except for a couple of our customers, one public sector customer and a couple of customers from Nigeria, if not for them, our collections DSO is well with less than even 60 days. We take to 70% of our collections. There is some perennial problem with some of the customers which we are taking corrective measures. And if you really look at the last year's accrual, cash accrual, Nitin will share with you.
Yeah, for the year ended last quarter, Sumit, we had a cash balance of about 38 crores. But because of this improvements in collections, our cash balance, when I talk about cash balance, again, it also includes the investments that is part of the non-current investments, which stands around 55 crores. So we have added actually 17 crores to we have been able to optimize our receivable positions, and we have added 17 crores to our kitty during this quarter. And it will continue to improve. And this is where we also have a lot of the platform to invest in our new green shoots as part of Project Butterfly.
Sure. So one thing regarding the investment, like the shareholding side, what happened is a couple of weeks back we had some large trade, and almost 5% of the equity changed hands. So a strategic investor in the company or something, because it was a very large stage, more than 5%.
We are not aware about those things, but definitely, we are always open to looking at strategic investors.
So as to speak, Sumit, this is again trading between individual shareholders. Shareholding is quite fragmented. If there is any strategic investors who is joining our cap table shareholding, we'll be happy to announce. And that really adds a lot of credibility to what we do.
Absolutely. My last question from my end. Normally, Q4 has been a lumpy quarter wherein we get almost like 40% of the revenues. I know the management has been trying to correct it and have a more uniform kind of a quarterly number. So, but anyway, going into the Q4, can we expect Q4 to be little lumpier and slightly better, and the overall numbers to be on a higher side? Q4 and next year, please.
You're putting words into my mouth. But Q4 is definitely a good quarter for us, and we hope it is a good quarter.
Okay. That's from my side. Thank you.
Thanks, Sumit.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from the line of Pratik Dedia, who's an individual investor. Please go ahead. Pratik, you may go ahead with the question.
Yeah, am I audible?
Yes, sir.
Yes, Pratik.
Yeah. I think my question is from sequential basis. I know you mentioned that we shouldn't be tracking you on a sequential basis, but on the last quarter, you had mentioned that you will see growth coming in. So just wanted to understand what happened this quarter, where if I look at sequentially, things were a bit lower, but I also see that margins have improved. So on the top line, what happened and what things changed on the margin side as well sequentially?
See, like you mentioned, Sandeep, like you correctly mentioned, Pratik, on a year-to-date basis, although we've seen our top line has increased, a significant increase in our revenue, but we have been able to provide those output services within the same bandwidth that we have in other organization. From a green shoot standpoint, this is, as a company, we are in transition process of under the Project Butterfly, and then subsequently in sometime during the next financial year, we'll switch on to growth phase of our Project Butterfly. So at this point of time, transition phase, we were able to crack some deals on the data services. We have been able to get into low-code, no-code platform. We are seeing a lot of traction in cloud services. So that will start to come in as we go forward. But from a margin standpoint, yes, it was a conscious effort from the organization to, despite increase in our top line, we wanted to, provide those from the same bandwidth that we have.
But really request you to not look at us on a quarter-on-quarter basis. And it is the business as such is not very predictable quarter-on-quarter just yet. And while we are adding a lot of opportunities to our site, it really depends on when we are able to close those opportunities. So request you to not look at us on a quarter-on-quarter basis. Look at us from a yearly standpoint, and we hope to continue to give you good results year on year.
Okay, sure. All right.
Thank you.
Yeah, two other questions from my end. One on the new deal wins that you mentioned. Can you provide a sense on how many years of if you've signed any contracts for existing value? I'm not taking on the cross-selling or probably higher selling opportunities, but just a sense of how long the contracts are, the new logo wins that you mentioned.
Typically, when we add new logos on our IP side, once we implement, this is a year-on-year thing. It's a sticky solution, so it's difficult for customers to kind of move on. So once we add a customer, it's about how well we can keep the customer satisfied and continue going. And as such, we're proud to say that till today we've never lost a customer because of poor performance. There may have been situations where companies shut down or companies were acquired, merged, etc. Those kind of things may have happened, but we've never lost on poor performance. So once we add a customer, it's about continuing the relationship over a longer lifetime.
Okay. And rough margin profile for these two logo wins?
It will only increase, sir, as Anisha mentioned in her opening statement. The point is that an enterprise customer is almost a lifetime customer now with our new added services, upsell, cross-sell opportunities being higher. The profitability and the margins and the opportunity will only increase. Getting the first breakthrough is what is important. And from here onward, we look forward to growing the wallet. It's one of the largest banks in Sri Lanka.
Okay.
And the second one is also one of the very fast-growing banks in India.
Got it. All right. Okay. And in terms of your tie-ups that you mentioned, where you are getting an opportunity to sell products from other companies, again, is that a cost-plus kind of arrangement on the margin side, or are you looking at a higher margin given the sophistication of the product that you would be selling?
So we are charging a decent margin. Otherwise, if we have negotiated very well, and we are looking at a decent margin, sir.
And we do cost plus as well as services. So services is on us.
Okay, so you are bundling your services plus the product that you're selling for someone else.
Yeah.
Okay, got it. All right, thank you.
Thank you. The next question is from Sanjeev Kumar Damani from SKD Consulting. Please go ahead.
Namaskar. Am I audible?
Yes.
Thank you, sir. Sir, except, I do not understand all these technology businesses, but my humble request would be that when you say logo means client only, na?
Right. Client, yes.
Okay. Secondly, firstly, I have to also congratulate you for very fine performance, operating as well as financial. So revenues have gone up. Your presentations are very good. And this, sir, how much is the export out of our total turnover of approximately 28 crores in this quarter?
Overall, sir, as a company, our exports have dropped because of increase in market size in the domestic market. We are very strong in India. And other exports are only in the Middle East and UK. We are not having much presence in the US.
Okay. So, how do you see the prospects in the UAE? Because a lot of Indian companies are taking place and a lot of developments are taking place there in UAE.
Yes,
so do you
UAE is showing a good promise, sir. But Africa, it's very difficult to do this business, especially in countries like Nigeria, where the currency devaluation is very high.
Right, sir. But UAE, you see some prospects?
Yes, UAE, we have strengthened our teams in UAE, and we are seeing some good promise there, sir.
Okay, so only prospects.
In fact, last quarter also we closed. Sorry. Last quarter also we closed a couple of logos in UAE.
Okay, so more are likely to come from UAE as well, right?
Yeah.
Right.
More business, more clients will be possible in days to come. Thank you.
Yes.
Now coming to another aspect is when you say annuity, in your media release, annuity engagement. So what I understand out of this is that it is a recurring business that will go on with us. Something like that? When you say
annuity, right, sir.
Okay. Thank you. And when you say growth engagement, so, what do we mean by growth engagement, sir, here?
Growth engagements are like, for example, you start with a small engagement and start adding other allied services or other products, complementary products into that account. For example, let's take a big bank. Their IT budgets are in $1 billion. So they're all very big multinational companies where we are already engaged, and how we can grow our pie in that. Those are the growth accounts.
Okay, sir. Okay. And one more thing, sir, that data services, when we say, our machines are analyzing the data, or our people are also required for analyzing these data and compiling or reproducing them?
Both, sir. You need tools and people. There we have IP assets and plus the required people skills to understand and use these tools and deploy those tools and use them for extraction, transformation, loading, and writing business rules based on the requirements.
Okay. Sir, regarding the employee retention, because these days I come to understand that in technology sector, the employee turnover is very high. So, what is our experience about it, and how do we retain the talent with us?
Sir, we've been having a great work culture in our organization. We more or less take care of all our employees, and we are a very bonded company. We keep our motivation of our employees very high. We reward the performance and we recognize everybody's contribution. And our attrition is much below the industry standard also.
Okay. Sir, can you also give names of your clients for whom you are working within India or outside?
Sir, the names are, almost all the top banks in India, India and UAE, and top insurance companies, top telecom companies. Some of them are there in our website collaterals. We have NDAs at non-disclosure.
Okay. Then there also you can't disclose much. I agree, sir. And sir, most of the time we are a subcontractor, or we are having always direct business with the end user.
We were, for a long period, we were subcontracting to IBM, TCS, Infosys and all that. But now with our good branding and good credibility in the market, we are able to directly engage with customers. Except one or two engagements, most of them are all direct.
Okay, sir. Thank you very much for answering my question. All the best from my side, sir.
Thank you.
Thank you.
Thank you. The next question is from Namit Arora from InGrowth Capital. Please go ahead.
Thank you for the opportunity. My question was around the company's positioning in the target employee base, given that your areas are very cutting edge, and in some of them trained pools may not be available. So if you could talk us through your efforts in terms of building the positioning of the company so that you are a preferred sort of a place to work for the target employee community. That was one. And secondly, your efforts on internal training and development of your employees, given that some of the areas that you're working on are fairly cutting edge and they may need internal training initiatives as well. Thank you.
Thanks for your question, Amit. So our hiring, you would be surprised actually as to the kind of talent that you can find in the tier 2s and tier 3s. So our strength has been around hiring from tier 2, tier 3s, giving them opportunities to come to the city and giving them, a lot of cutting edge engineering opportunities which otherwise they don't get by working for traditional services organizations. So that's the strength that we've been operating in, and touchwood, it's also word of mouth. So once we hire from a college, the word spreads on how happy an existing batch is, and then we're able to hire subsequently from that college as well. So that's why we're able to, hire talent from there. And in terms of upskilling and cross-selling, in fact, last quarter we also signed on with Coursera to provide a platform for everybody in our organization to be able to leverage Coursera's entire content, to be able to upskill process and, upskill across different technologies, different skills, etc. And, so we are making slow and steady investments to ensure that we provide enough opportunities for learning also within the organization.
Got it. Thank you for your very
serious about talent, sir, and in the first 6 months to once an employee joins, he goes through a lot of training programs, a lot of best practices, and then before we take him on to any live projects or any one of them. Plus, as Anisha mentioned, we invest in a lot of training materials and training courses for our people, and that is one of the reasons also of low attrition for us.
Got it. Thank you very much for your detailed thoughts, Anisha and Mr. Shastri, and all the best to the entire team. Thank you.
Thank you, sir.
Thank you. Thank you.
Thank you. The next question is from the line of Aman from Aman Investment. Please go ahead.
Hello. Am I audible, sir?
Yeah, we didn't get your name. Your voice is very low.
Aman, it's Aman, sir. A-M-A-N.
Aman. Okay, hi, Aman.
Yeah, hi, sir. Hi, Anisha, hi, Jay. Everyone, hi.
Hi.
Sir, my questions are particularly three, and follow-up will be again asked. I just wanted to understand one thing when you mentioned upselling, cross-selling, taking Project Butterfly to the next level. I just wanted to understand what minimum benchmarks you have in terms of matrices ROC or ROE while taking a new project into account.
We set certain aspirations in an account, depending on the size of the account. Let's say that, we won a very large bank. As our engagement progresses, we keep changing the goalpost and increasing the size of the wallet. For example, one of our banks, we said by next year we should do 25 crores in this single account. So that's how we benchmark and we go about it, but there is no scientific measurement, sir.
Can you just give a range in between? If we deploy so much of human resource into it, we'll be returned with this much amount additionally as revenue or profits. Any particular figure you have in mind in the terms of?
Because we are talking about IP-led services. It is a specialized thing. Even your IP is counted, your outcomes are counted. The pricing is based on outcomes. So that it's just not straight away pure services game where we say that I deploy so many people, this is my margin, this is the number of resources I get out of that. Not.
Just to answer, just to probably build on what Shastri has responded, our belief on margins is always two-layered. Yes, on the front layer is what competition offers, and so there is not much scope for us to kind of play around that because that's what the market will bear. But constantly what we are doing within, because all our services are also led by our own IP that we have built, constantly it's an endeavor to kind of automate everything, so that on the back end too, we are able to, with the existing resources, do more.
Okay, sir. Thank you. That would be helpful. The second question, I just wanted to ask, this ongoing year, because I usually get to know the experience of the promoters as well. Any two things which you planned and performed very well, and any two things which you planned and didn't go as well as you had thought of it? Any two things which you can share in this year, sir?
Yeah. One of these things, the Project Butterfly, which we had taken up, in that we had progressed slow, one in the cloud services side, two on the talent as a service.
Okay, sir.
It is performance, but others are showing good promise.
Okay. And sir, as I was getting some inputs from yours, Project Butterfly is well accepted from our existing clients. Is it not retaliating? Is it not?
It's well internal strategy. It is nothing to do with external.
No, sir. When we are doing upselling and cross-selling, is it not because we just on that? I just wanted to understand. You said you are selling partnered products as well. If you can just give a brief highlight of what margins do we have on these partnered products, and what is the proportion of our total revenue which is for this year going to be from the partnered product only?
Sir, typically there are some of the platforms are well-established platforms like, how does it fit into our overall solutioning? 75% of our solution is there, and if we by plugging in the external product, we give a 100% solution, we go in for that. Okay. And the numbers of partner products is very less.
Okay.
But it will add value to our value proposition as an overall thing.
Okay, sir. And do we expect the same EBITDA margins going forward with partnered products as well?
Yes. That's how we are negotiating.
Okay, sir. And sir, on the geographies, I heard that you are very bullish about UAE, and also there is a good, upward trend on the technological sector in all the Western countries and on those upper belts. So do we have any plans, or do we find any opportunities in collaborating in development or partnering with them? For Azure, we have put a new product onto the platform. What kind of products is it? How am I saying? Are we collaborating with them much strongly on our technological knowledge which we carry, bandwidth? what kind of collaborations do you see going forward?
We have two types of partnerships, sir. One is the AWS and system integrator, big players, all the big system integrators, and the cloud service providers like AWS, Oracle Cloud, and Azure Cloud. As Anisha mentioned in our operation update, today two of our products are on the marketplace of Azure. Marketplace of Azure means the marketplace of AWS means the entire AWS, they do the evaluation, they certify, and then they put the product on the marketplace. Once it is in the marketplace, the sales force, the sales reach of the AWS team also comes in to help us. That is one relationship which we have. The system integrator relationships are opportunity based. Whenever they see an opportunity, for example, they saw an opportunity in income tax by Infosys, says that Intent is a very good solution to put it in income tax. They have chosen us for that. Similarly, most of these, we are slowing down on the system integrator partners. We are looking at direct engagements as we go along, if it is not of very significant value.
Okay. Sir, is it possible to upscale and cross-sell on those platforms as well? On Azure and AWS, not just a fixed product?
Yes, it is possible. It is possible. It is too early for us to predict because it's a SaaS model. It's a transaction-based model. How fast we just got enlisted in the marketplace. There is a huge opportunity there, but it's too early to predict or say any numbers on that.
Okay, sir. And what kind of just I wanted to understand, because it's a very new set of cutting edge technology, everything understood. What kind of competitive environment are we facing in India and also overseas? Because I think these are very, data driven, and these data are very confidential in nature. Yes,
that's where our strength is, sir. The thing is that, as a focused data services company, we were never positioning ourselves there. Though we were doing all the work of data company, we were not positioning ourselves. Now we started positioning. There seems to be a huge opportunity. That the data is the next big oil. And we see good opportunities coming from there. We are also making investments in the cutting edge technologies like building insights, AI-driven insights, and other things in our IP stack.
Okay. Thank you. That's all.
Yeah.
Thank you. Participants who wish to ask a question, please press star and 1. The next question is from the line of Pratik Dedia, who is an individual investor. Please go ahead.
Thanks for taking my question again. So I wanted some guidance on a 3 or 4 year kind of outlook from your end. How do you think, what kind of scale you think you would be able to achieve, both on top line and bottom line?
So, Pratik, to answer your questions, the way we look at our business, we break it down into two. The existing business from an annuity standpoint that will continue to grow year on year and 20%. The growth engagements, the green shoots that we have introduced just first quarter of this financial year, and few are yet to take off. Ascribing a number to this would be very difficult for us. So giving some sort of guidance from a 3 to 4 years would be very difficult in terms of to quantify it. But yes,
our aspiration is to grow at 30%.
Okay. And on the bottom line, or probably some guidance on margins?
We have brought in a lot of focus on cost optimization. We'll definitely, be able to clock in the existing numbers, and probably there is an upside of 10% on existing margins that we see in the short run.
And also we are making investments in increasing the sales organization.
Okay. So if I get a sense, do you think 25 to 30% EBITDA margin is a sustainable number?
I don't think we want to comment on exact numbers, Prateek.
Okay.
So
yeah, putting ballpark ranges.
All we can say is that we've put in our best effort.
Okay, sure. All right. And
Thank you.
one small.
Having said that, Prateek, it would be a shame not to defend our existing margins and always an endeavor to increase them.
Perfect. Okay, that's encouraging. One small question. I think you mentioned that you've been externalizing your IP through smaller products, through Chrome extensions. So just wanted to know what kind of traction are you looking at, and what kind of how do you see it scaling?
Sure. So we just embarked on this journey, Prateek. Last couple months is when we had been able to launch those extensions. We're slowly seeing good traction. It's picking up, I'd say. So since this is a new territory that we are also operating in, it probably took a little bit of time for it to fully go up to speed. But eventually, the intention is that these revenue streams don't require a whole lot of sales spend. You spend on a little bit of digital marketing and you're good to go. So we're trying to create those kind of smaller revenue streams that are recurring in nature.
Similarly, transmission is the same thing. We have added the transmission into the same line, where we used to earlier pass it on to a gateway company. Now we are putting our own gateway, and we are also charging for the transmission services for our communications partner, which will also add to the time.
Sure.
Okay.
Yeah. So by putting our own gateway, we partner with existing telecom customers of ours to use their gateways directly.
Got it. All right. Cool. Okay, that's it from my end. Thank you.
Thank you so much.
Thank you. The next question is from Prateek Chaudhary from Samarthya Capital. Please go ahead.
Am I audible, sir?
Yeah.
I'm fairly new to the company and had a very basic question to ask. I can see our promoter share is about 21%. Do we intend to increase that through a preferential to the promoters or in any other way?
You must have noticed that I had increased it last year already, and would not want to make any commitments at the moment. But from the time we started this company, we've been only increasing our stake. The early promoters had left. That's how the promoter holding is appearing to be less.
Okay. And any estimates on, because we're in the product and services domain, so, and sometimes if a product clicks and we get runaway success.
We would urge you to visit us, or probably take maybe a separate appointment where we can take you through our products, our domains, the market potential, and how it can deliver value to end customers and these things. I'll appreciate if that would be there, because we have suite of solutions, but at a high level I can give you digital customer engagement and communications is one. Data related is other. IP data in terms of governance, quality, and computation, and the other is the low-code, no-code platform. Three broad areas where we have IP assets, we've been in the Gartner Magic Quadrant for our customer communication. We've been recognized as leaders by Aspire and Matrix for some of our products. We have marquee customers, Fortune 500 customers in India and abroad. So this is what it is. For more in-depth understanding and all that, I'll urge you to visit us or take an appointment and we'll run you past in depth.
Sure, sir. And I should get in touch with Mr. Siddharth from CDR?
Yes.
Okay. Okay, fine. Thank you, sir.
Thank you. The next question is from Pradeep A, who's an individual investor. Please go ahead.
Thank you. Good afternoon. My question is regarding the product pipeline. What are the new products on the pipeline, and how these products differentiate with existing competitors? And any timelines of these products to go live?
See, being an IP-led company, we've been continuously investing on IP-led companies. Being in customer communications, we've added the insight-based campaign management solution, and it's definitely a crowded place, but we are seeing some good traction coming for it. We're calling it Uniserve Reach. We've also AI-based chatbot is there. We are investing in blockchain, smart contracts. But at the moment, they are yet to be commercialized. The Reach is one which is looking at commercialization stage, and a good traction we are seeing. As far as the market size is concerned, it's very huge. For me, it's in billions of dollars, and it doesn't make sense for me to make a mention of that.
Yeah, any timelines, sir? Yeah, like any product timelines for these products to go live?
We are seeing Reach. We are seeing that it should see some traction. 3-4 customers we are hoping to go live this year.
Mm-hmm.
It is a SaaS model, and you will not see the big lumpy revenues from it. It is a transaction-based revenue, so it's an ongoing revenue opportunity.
Okay. And the second question is, how you are leveraging this? You mentioned like blockchain and AI. How you are leveraging the blockchain and AI is for the new products, or are we integrating with the existing products as well? And continue to that, and how you are promoting or marketing these products? That's all.
The new products, first and best place for us to promote our new products is to our existing clients, because we have very large existing marquee names where we go there and test our waters and see the value what they see. These are very stringent evaluators and stringent people. So we take the first approach of our existing customers before we go out into the new markets.
Okay. Yeah, thank you.
Thank you.
Thank you. The next question is from the line of Aman from Aman Investments. Please go ahead.
Yeah. Thank you for that opportunity again. So I just wanted to understand what at the beginning of the year, when the project Butterfly kicked off, so how many total number of products or services we had, and till date, how many new products or services have we added?
We have not added any new products and services. The Reach was in its early stage. It is now beta release was there in the early stage of the year,
okay.
And thereon we started engaging with customers and doing pilots. The other products, which small ones like the extensions which Anisha mentioned, are the new addition.
Okay.
So also just to let you know, man, until last year, all we would sell was our flagship product. But this year onwards, very consciously, that has become a smaller portion of our, overall pipe. Our overall pipe focuses not just on the one flagship product of ours, but on a suite of solutions and on a suite of services that we can additionally sell on top of that. So, while we may not have added, individual products per se to our portfolio, by means of partnerships and by means of services, etc., there is a lot more to offer.
Perfect. And just on extension to that, I just wanted to understand what is an average ticket size per client or per customer or per contract which we have, and also how many number of projects have we executed in this 9 months, and what is the guidance for the total 12 months till March?
So the ticket sizes will really depend on each revenue stream,
Okay.
you know.
Any
for example,
average ballpark number?
So averages also will be more per revenue stream. Like for example, if you look at say our communication space, maybe the average ticket size will be about 200K, 250K initially, but you know later maybe a recurring of the same value per se. If you look at say data services, etc., these may be more in the lines of say 500K, 600K, you know, or maybe even $1 million. You know, in that kind of a range. So it really depends on which line item you're talking about. We also have, we do a lot of managed services. You know, those are again a completely different ballgame. Like in one organization, we do per onboard, so we charge per onboarding of customer. In another organization, so it really, you know, we can't really average across all our offerings. The individual offerings, I think, averages are, you know.
Just to get you a revenue perspective, as we mentioned, 75 to 80% is our existing customer revenue, and the 30 to 25% is the new logos.
Let me tell you the intention of this question. When we say that it is a very positive cycle or a positive trend for our business, I just wanted to understand from the number of projects, whether the till date, whatever we have done, and upcoming 2 or 3 years, we'll be continuing to do multiple projects, or will be the ticket size going up and the projects going down? How is it going to work? So whether we are exploring most of our employees working different projects, or they're focusing on some projects only, so that I get a sense where either we are specializing on something, or are we a diverse communication platform? So that's why. That was my intention. And if you can comment on it, it will be better.
Fair enough. So basically the three major spaces that we operate in, one is communication governance, one is data management, and then the other is standardized managed services. Now the managed services may really depend from opportunity, engagement to engagement on what they require. Like, you know, in one government organization, we're digitizing their, you know, internal systems. Versus in another, we're working on, you know, their onboarding of their customers, etc. So managed services may not really be specialized, but the communication governance and data quality services, etc., those are more niche areas that, you know, we tend to focus on.
Okay. Now, you had commented on the last call that initially when we started, we were product-based. Now, our employee pool is such talented, which they have their own products, they have their own specialization, they have their own skills. Have we found any route or a roadmap to monetize it, like different people doing different jobs rather than coming together and doing one single job? So because multiple products we have added, have we able to chart it down a roadmap or any such sort of brainstorming has been done to put it in a monetization phase or commercialization phase?
Absolutely. So actually a result of that is also the, like for example, the reach that we added, you know, or the test automation. You know, all of these are a result of, you know, that as well. You know, the fact that originally our talent was focused on working on certain directions, and then now we have given each team individual, you know, kind of focus areas, and we've also split the team into a certain set of teams managing managed services.
Yeah. Okay, ma'am. So I've got it. So have you found any drawbacks of this approach, or is it working well for our organization?
It's so far so good, I'd say.
Okay, sure, ma'am. Okay, thank you.
Thank you very much. That was the last question. I would now like to hand the conference back to the management team for closing comments.
All right. Thank you so much, everybody, for joining us. Really appreciate it. we unfortunately, I think we have lost Mr. CK and Nitin's line over here, but I will close it on behalf of Mr. Shastri. Thank you so much for joining us on this call today. We have been putting in all our efforts in a focused direction. Whatever we set forth as strategy with Project Butterfly, it is working well for us. And areas where we have not been able to see as much traction, we've also pulled back on investment from there and pushed our investments back into areas where we are seeing more traction. So while the overall strategy continues to remain the same, we make internal changes to ensure that we are utilizing our resources efficiently and are able to, deliver the kind of value that this company deserves. So thank you so much for joining us on this call and being patient with us.
I got dropped. We got dropped in the line. I'm so sorry. Thank you very much, everyone, for having joined the call. Really appreciate it.
Thank you very much. On behalf of Intense Technologies Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.